Hi, this is Sam, Glaritan Group financial analyst. Here's the broadcast of the crude oil and other commodities. I'll be here to share information with you every week. On the path to the presidency, Joe Biden talked about his plans for the oil and gas business. While he was on the campaign trail, he vowed not to approve the new drilling for oil and gas on federal land. Indeed, he quickly proved he meant business by suspending the new oil and gas leasing and drilling permits on public land shortly after his ascendant into the Oval Office. But those were the halcyon days before his reality, including the aftermath of the COVID and Russia's war in Ukraine. Biden would be forced to go against his core ethos when he famously urged the U.S. oil producers to ramp up the production amid the record crude and gas price. Democrats were then forced to make a major concession when he pushed the IRA bill by including the provision that requires the government to offer the specific acreage of the federal offshore and onshore holdings for oil and gas leasing in the bid to allow for the renewable development. The oil price climbed to the highest level for the year of this week, extending the rally that has put a return of $100 a barrel sharply into the focus. Analysts at the Bank of America said they believe the oil price could spike beyond the triple digits before the year end. Global head of the energy strategy and head of the oil and gas equity research at JP Morgan believe the price of the oil is likely to trade at a range of $80 to $100 in the short term and at around $80 of the long term. Oil price climbed to the highest level for the year this week, extending the rally that has put a return of $100 a barrel sharply into the focus. Indeed, some analysts believe the crude oil price could hit a milestone before the end of this year. International benchmark Brent futures trade lower at $93.46 a barrel on Friday afternoon in London, September the 16th, 2023, while U.S. West Texas Intermediate futures little unchanged $90.09. Both Brent and WTI settle at their highest respective level of this year. The oil contracts are sharply higher months to date and remain firmly on track to notch their third consecutive positive week. The price really comes amid the growing expectations of tighter supply after Saudi Arabia and Russia moved to draw down the global inventories and extend their oil output cut through the end of this year. Analysts at the bank indicate that they now believe the price is already about $100. Should OPEC maintain ongoing supply cut through against Asia's positive demand backdrop, we now believe the Brent price will spike past $100 before 2024. The oil broker said a jump toward the 100 milestone was plausible, citing production constraints from Saudi Arabia and Russia, upcoming refinery maintenance, the structural shortage of the diesel in Europe, and the growing consensus that current cycle of the tightening will soon come to the end. Nevertheless, such a rally also entitled a renewable inflationary pressure that was reflected in this week. The U.S. inflation data and the rise in consumer spending, which indicate that the interest rate may be higher for longer and could have a negative impact on both economic and oil demand growth. The International Energy Agency warned that Saudi Arabia and Russia's production constraint would likely result in a substantial market deficit through the fourth quarter. The world's leading energy authority said its monthly oil price that upward curves by the OPEC and non-OPEC members for more than 2.5 million barrels per day since the start of this year has so far been offset by members outside the OPEC alliance, such as the US and Brazil. So under the influence of the comprehensive factors, the price of the crude oil remains over $88 to $91. Based on the situation, the international energy market will remain outgoing and shocking. And for professional manufacturing, you can consider selling commodities and inventories when price still have an edge. And for the import and export trade enterprise, our strategy is conducting the market hedging and long the PP, and also at the time short the PTA. Does such a massive change have any impact on your industry? If you have any questions or ideas of the financial market, please feel free to contact us. I'm Sam, financial analyst with the passion of quantum physics. Don't forget to follow us. Thank you.